We've got Devender Singhal as well joining in on the show right now to talk about his take on the market. Devender, hi. Good afternoon. Good to have you on the show. Tell me, how is it that you're mapping the entire construct of the two-wheeler industry?
Hi, good afternoon. See, it's been a mixed bag so far. We have seen EVs getting some traction. We have seen premium end of the motorcycles and scooters both getting some traction. But it's the lowest end of the market, the commuter segment, which has been under pressure. So I think hopefully with this good continued good monsoons, some flip from the government side in terms of being pushed and the rollouts, and next year's pay commission, this segment also should start kicking in.
Good afternoon to you, Devendra. This is Cheryl also joining in the conversation, and wanted to get your take now on the markets. How should one analyze? Because you have a slew of news that has actually played out over the last 2 to 3 weeks. You saw the sharp rally coming on the markets. You got the China-US trade truce. Everyone's watching and waiting and watching what will India do when you talk about trade deal with the United States. How should one actually now position themselves for the future?
See, first of all, there are two aspects to the trade deal. First is that we should ourselves get a pretty favorable one in terms of low tariff or low import duties being levied to us on our exports therein by the US. Second and most important is that we should not be in an unfavorable stance relative to our competitors. This would be like countries like Bangladesh, Vietnam, Sri Lanka, China. So both of that have to basically be in our favor for us to see a big kick up to our overall exports therein. So we have to wait and watch and see how India basically is able to get whether we get a sweeter part of the deal or we are just with everybody else's now.
Yeah, absolutely. That's Hero MotoCorp. Let's just bring up that stock price up for you once again and show you how it's been reacting to the numbers and whether or not there is any material move on the stock price or not. There you go, 1.25% higher is where Hero MotoCorp is currently, 40.35 on the stock. But the one segment which continues to outperform, it's oversold and continues to remain so, is IT. Do you think IT becomes a good contra play right now? Or would you still say there is still a lot of uncertainty out there with regards to how client spends in the US are going to pan out and what the shape of the US economy is going to be, so it's a best avoid right now?
See, I think that could have been the situation a couple of months back, specifically post the implementation of tariffs. Things were looking really hazy. Incrementally, as we are moving towards deals by deals happening with the US, first it was UK, now China. Hopefully, we should also sign a deal with the US administration sooner. I think it is basically resulting in a much more, visibility for the overall US corporates to do well. That being so, I think IT still offers a pretty decent scope to emerge even from here. I think the caveat here is that how intense would be the AI and its implications for the entire sector. I think otherwise we are getting things getting much clearer versus what it was 2 months back.
Absolutely. Devendra, stay with us. I'm going to quickly get in my researcher as well and try and stack up those Hero MotoCorp numbers. Shrishti, hi, afternoon. Largely an inline set, but tell me, what's the commentary on future volume growth as well as their AV strategy, product mix, etc.?
Well, yes, inline set of numbers coming in from Hero MotoCorp, and especially the margin figure, because that was the key monitorable amidst the decline in the volume that we have seen for the company coming in. The company was actually able to sustain its margin at 14.2%, but the management commentary is definitely on the positive side. Hero MotoCorp generally come out with a positive management commentary, but this time they are highlighting that the EBITDA margin has been supported by a favorable product mix. This is enhanced by the cost efficiencies and the commodity cost control as well. The export volumes for Hero MotoCorp has outpaced the growth in the industry trend, though of course the key to note is that they are a little smaller player when it comes to the export market versus the rest, but the growth numbers are looking attractive. perspective, they are observing strong retail traction, especially in their new premium and the scooter offering, the continued consolidation in the core segment, the growth in the 125cc segment is what they are actually experiencing on ground, and the upcoming EV launch position them very well for a sustained growth momentum is what the company is highlighting. And lastly, looking ahead, they remain optimistic about the near to medium term growth outlook. So inline set of numbers, but yes, on many fronts, be it exports, be it some of the new launches, be it the segment wise contribution, the management commentary remains quite positive.
Right, so that's Hero MotoCorp for you, and what the commentary is coming in from the management, given the fact that the stock now is spiking in trade, 1.7% uptick coming in for Hero MotoCorp. Devender, let me just come to you and get your view actually when you talk about the pharma space. In fact, before I do that, let me actually get Srishti once again on board to talk about Cipla numbers, because that one also came up with the numbers short while ago, and post that, Devender, I'll get your view on the entire pharma space. But Srishti, tell us how are the numbers Cipla?
Almost in line set of numbers coming in from Cipla. Marginal disappointment what we have seen on the margin figure is what I would call it. Because when it comes to the numbers, then the margin figure has come in at 22.5%, while the consensus street estimate was above 25%. And other than that, when we look at the profit figure, that has come in at 1214 crores, almost in line to what we were penciling in. If we look at some of the geographical contributions coming in for Cipla, then for North America market, the company has registered a sales number of $221 million. That's almost in line, a marginal disappointment on this front. And when it comes to the India business, a 10 to 13% growth is what we were penciling in, but the company actually registered an 8% growth on a YOY basis. The R&D spend stood at 6.3% for the quarter gone by. But looking ahead, Umang Vora, MD and CEO of Cipla Limited, does say that the focus will be on growing their key markets, further building their flagship brands, investing in the future pipeline, and focusing on resolutions on the regulatory front as well. So that's the management commentary on Cipla. Almost in line set of numbers is what I could call it for this particular company. Back to you.
Line set for Cipla, inline set for Hero MotoCorp, although the management commentary from Hero MotoCorp is extremely bullish, and I guess that is what explains the stock spiking up. While the numbers were largely in line, the management is so confident about actually demand gaining traction and where they actually foresee Hero MotoCorp's performance in the next quarter and the fiscal as well. 2.25% higher for Hero MotoCorp as we speak right now, 40.70 on the stock. They did talk about EBITDA margin being supported by favorable demand dynamics right now, and export volumes actually managed to outpace the industry trends for them. That is what the management is indicating, observing strong retail traction, especially in new premium and scooter offerings for them. But Devender, tell us about what you're saying, or rather your thoughts are on pharma right now. While Indian generics are largely protected, we don't know how the tariff tirade is actually going to pan out and whether or not eventually there will be some margin squeeze.
See, I won't dare say they're protected at this point in time because we are yet to see the contours of the deals gonna come. It does look like that the US is looking at lowering the drug prices. Now, how much of that impact would be taken by the end companies and how much from the ingredient suppliers or generic suppliers? I'm sure there would be some cut for sure. Now, the extent of which we don't know. It may be a minor cut, but I I won't be in the camp that would say that, despite whatever being the burn being taken by the branded players, generics would be largely left untouched. I don't think that that's how it happens. Having said that, I think a lot of uncertainty around the sector is getting off. So we should basically be in a better state as we move forward. Now, within a month, we would get to know how much is the price erosion in the drugs of the branded players being there, and then how would the generics be in comparison to that. So if the differential is not, we may do with some cuts. I think cost savings and something other measures can help us maintain the margins for the Indian players, but it's yet to be seen.
Right. Coming in on pharma right now, IT of course is the big drag as we see, but some of the other blue chips like ICICI Bank, L&T, Reliance, HDFC Bank, they are also not participating in today's move. Bharti is under pressure. It's down about 2.5%. There's M&M also, which is lower by about 2% as we speak. We will, of course, get in the earnings expectation of Bharti as well in just a bit. But Kunal, what do you foresee about today's move? Does it seem like we're going to undo all of yesterday's gain? And yesterday, does it seem like a flash in the pan now?
In terms of the market rally?
Yeah.
No, not really. I think we are still good to go on the upside. So after yesterday's 1,000-point move, I think what we are seeing is mild profit booking because we are looking at the market internals. Yesterday we saw many large cap names opening up on the upside, and then they see very mild bit of a follow through. Today, even though the markets are down 300 odd points on the Nifty, you're not seeing any major crack happening in terms of sectors or large cap stocks. Yes, there has been some bit of profit booking across a broader based large cap names, but nothing major in terms of the trend reversal. For example, HDFC Bank, ICICI Bank, these stocks are down 0.5% to 1% broadly, which is a very normal or an average kind of a day for the index. And I think we are retesting that levels of 24,500 mark, which I believe is a very strong support levels. My sense is that we should be aiming for a decent bounce over the next couple of days for the indices. So as an index trader, I think this dip should be bought into, especially 24,500, keeping that as a strong support or a pivot point for the index.
Since Bharti also is due to report its numbers and it's going in a little bit weak, although it's been a leadership stock regardless. But Ansh is here to tell us what we can expect from Bharti's quarterly performance. Ansh?
Bharti Airtel is set to report strong operational quarter. So revenue is likely to rise by around 7.7% sequentially to 48,602 crore. Whereas if we talk about Africa revenue, then that is expected to grow by around 2% sequentially in dollar terms to $1.3 billion. If we talk about EBITDA on consolidation basis, then we are seeing that it might go up by around 12% sequentially to 27,505 crore with margin expansion of more than 200 basis point to 56.6%. Now this India EBITDA may boost largely due to Indus Star consolidation. But on the bottom line, if we talk about net profit, then that may fall sharply by around 54% sequentially to 6,752 crore, as last quarter actually included one-time exceptional gain of around 7,546 crore. Talking about business front, if we talk about segment wise, then mobile service revenue may dip by around 1%, whereas enterprises business is likely to decline by 4 to 5%. ARPU may rise by from 245 rupees directly to 250 rupees, and this would be on the back of 2G to 4G migration. Also, data subscriber is expected to be at 28.4 crore, which is up by around 2.2% sequentially. Now, apart from these numbers, there are key things to watch out for. First is progress on 5G rollout. Second is capex trend, and third, most importantly, is cues on future tariff hikes.
All right, thank you so much for that, Ansh. We'll be watching out for Bharti Airtel when they come out with their numbers. Devender, coming back to you, actually, I want to get your view on the entire telecom space, given the fact that you had a lot of focus and emphasis on the fact that you should look at domestic-oriented sectors. That's where you will actually, or maybe you will make money in this year, given the fact that you're seeing a volatile times globally. What's your take? Telecom makes the cut in that entire sort of a strategy?
Absolutely. This is one sector which is largely domestic focused, and you are seeing very little disruptions in terms of the earnings growth. Whatever is coming up is actually helping the sector consolidate and move towards better profitability. We have seen the ARPU increases last year. I think in June, we would have it been almost 12 months since the last price hike. There have been buzz around that this could be another one going forward over the next couple of quarters. All this adds to a pretty sharp increase in the overall profitability for the sector. I think institutions are also looking at this as a proxy consumption play. You are looking at, secular earnings growth plus upsides coming from better usage and better data usage and ARPU increases. So yeah, a good proxy to the overall consumption, specifically domestic consumption.
Okay, that's the take, of course, in Bharti. But Devender, what we've seen is leadership has been very restricted in few hands in this entire turmoil which played out in the market and I'm just accounting for start of the year till what happened till March end, then the recovery which has played through, little bit of turmoil since April 2nd tariff announcement, and then the recovery again thereafter. It's largely been HDFC Bank, ICICI Bank, M&M, Bharti when it comes to the Nifty. Do you now think that in the next leg of the market move, there could be newer leaders which could emerge? And if so, which ones do you think one could look at?
See, anecdotally, what you're saying should be the case, but I think it's very difficult to find out what the new leaders could be. I think the focus now should be that wherever you see growth happening, because India is a growth market. So whichever stocks or sectors you see growth happening, I think that they should be the ones one should be looking at keenly. Obviously, one should not overpay for the kind of growth. So yes, sectors which can give you growth in this environment would be the ones which would be favored by the market for sure.
Right. Let's put the spotlight then on the other sector that everyone's been talking about, and that is the metal space, Devender. Given the fact that this one also is pretty much impacted with what happens globally, how should one actually watch this space? And especially when you talk about metals, you have a lot of ferrous, non-ferrous. You need to actually make the right pick in that space. Do you think it's time to look at metals in this sort of ever-changing, volatile environment?
See, honestly, I have a very poor understanding of metals. All through my investment career, I've been using one formula that whenever it is the costliest, you need to buy it. Whenever it is the cheapest, you need to sell it. So when the things are in losses and you want to you see a turnaround happening, that is when you get into the metals. I think I have not been able to trade into them otherwise.
Makes sense. Okay, Devendra, good to have you on the show. We'll let you go on that note. Thanks for your time.